Hey traders, Raggy here, and I'm coming to you with a midday update on two of our euro shorts. Now, you know I've been a US dollar bull, and on the flip side of that equation is the euro shorts, and we're going to take a look at two of the trades that are on the current spreadsheet in terms of open trades, because today we have an update. So let me just bring you up to speed here. The euro yen short sell from the 131.45 level. This was a trade that we punched into the spreadsheet on the 23rd. We updated on the 24th, and we got the fill on the 24th. So we're looking at a 34 EMA low sell, and that's just a classic swing short conservative level. And that follow through has taken us through the 30.20, the 130.20 level, through the 126.90, and now to the second optional. Now these dotted lines are optional targets. They're on the charts that I share in the members area, and they're also, at least one of the optional levels is in the spreadsheet. So the first one, the 30.20, was taken out. Now we're looking at what was a third target for those of you that wanted to just scale out of this trade. If not, for most of you, the 130.20 level was very important, because that was where we got to move from the risk-based stop loss that was either the 133.30 or 132.60. We get to move now to a break even, which I have at 131.55. So one of the things that I want to share with you right now is the way we determine whether or not we're ready to move away from the break even and start entertaining the notion of a trailing stop. Now, trailing stops is a couple of things. It's not just a matter of the pips. It's also a matter of the type of increase in volatility that we could expect this week. Now, obviously, with non-farm payroll on Friday, a bank holiday affected Friday, I should mention as well. We know we're going to see a higher amount of pip movement range, but we still want to be able to quantify what higher really is. So let's take a look at the auto chartist, and we can take a peek at, here we go, the daily. Now this is a daily time frame that we are watching, and this daily time frame setup really does deserve at least average to the high end of the price movement range. So we can see here, today's Tuesday, and I can be pretty specific to the level. So I can look here at basically what's this 120 area all the way up to the 150 area. So if I have at least 120 to 150 pips to give back today, I can at least entertain the idea of backing off to a trailing stop, depending on, again, this notion of, do I have it to give back? Now, what does that mean? Well, I'm only going to risk unrealized profit. I'm not going to put a stop beyond a break even at 131.55 and call it a trailing. A trailing should really exclusively represent what would be still a gain, even if it's a minor gain, but still a gain on the trade. So all we do is we look at that entry level at 131.50. From that we subtract here currently 128.75, and that gives us 270 pips at the moment. Now I just mentioned I can back off by 120 to 150 pips. That's probably about as close as I really want to get. But for those of you that want to more aggressively trail a stop in this trade, 120 to 150 would be a really good place to start considering that type of backing off, that type of trailing stop. So we have it to give back. In fact, we have that plus, easily another 120 to 150 pips, depending upon what you want to use. So that's one thing you can do. Now, your level of aggression really should be also considered at the same time as your increase in volatility. If you don't want to risk that much unrealized profit, or what I endearingly call house money, then go ahead and leave it at the break even at 131.55. But here's the thing. At some point, we do want to transition to a trailing. Perhaps that's going to be if we can survive non-farm payroll with the trade still intact, and then at that point going into a quieter week post non-farm payroll after the Easter open. Now remember, Sunday Easter opens can be kind of volatile. I'll talk about that in a video here later on this week. So we want to at least account for that increase in volatility, which is why I'm really in no rush to jump to a trailing, but it is an option we have for those of you that want to lock in some of this awesome pippage that we have here. Okay, so that brings me to the Euro US, which is the newer trade management update on the spreadsheet, and that is the optional that was at 107.70. I actually moved it up by 10 pips to 107.80. So you can see that there, and that is an opportunity to take a little bit of the position off the table. So think about it this way. You've got a 109.90 entry. That's what we entered from, 109.90, and we take 107.80 off the table. So what are you taking off the table here? You could take, the typical example that I use. My position here is 4 full-size lots. So what I like to do at the first profit target, whether that be an optional that I take or a non-negotiable, is typically take half my position off the table. In this case, that would be 2 lots that I'm taking off the table for a 210 pip gain each. So it's a 420 pip winner at this point. Now what's really important is not necessarily the fact that I've taken some pips off the table, although taking 400 plus pips is always nice. The more important part here is that we get to move down off the 1125 point of validity stop loss and put in a break even at 1.1005. So now we're basically risking 15 pips per remaining lot. So if I've got 2 more lots open, one of my favorite things to tell my traders in the morning when we're setting up these trades is, show me your stop and I'll show you your P&L. So at this point, what am I risking? I've got 420 pips that I've realized as a profit. I've got 2 more lots that have a 15 pip per risk, so that's a total of 30 pips. So 420 minus 30 means my P&L here, if I were to get break even stop lost out, in other words at 1.1005 level, that's a 390 pip gain. Now some of you might say, well, Raghi, 15 pips isn't exactly break even, but it's the spirit of a break even. It's moving to a level that's much more representative of being closer to my entry and my unwillingness to really let the market chip away at my capital. In fact, really all I'm really risking at this point is house money. The house might get a chance to grab 30 more of their pips back. And then of course there's the unrealized profit, which is not, it's not inconsequential, don't get me wrong. If you take a look at 1.0990 all the way down to where we are right now at 1.0, where are we at, 733, that gives us 257 pips. Now some of you might say, Raghi, it's non-farm payroll Friday, it's a holiday affected week, I want to go ahead and lock in the entire trade here, whatever I might have left, go for it. Because if you've got 4 lots and you have a 257 pip gain right now, let's just call it 250, that's a 1,000 pip winner you're pulling off the table before non-farm payroll. What's the risk in that? Well, the downside risk is nothing. It's really about the opportunistic risk. What if the US dollar has a great non-farm payroll? The dollar is going to skyrocket. That's going to send this pair lower, and we could see 106.55. So what's going to determine whether or not you like taking the trade off the table now for, hypothetically getting flat and taking 1,000 pips off the table? What would determine that is, what would short circuit you more? What would get you revenge trading? What would get you kicking yourself? There's no right or wrong answer here. All I'm trying to say is get to know yourself, know thyself. That means that at the end of the day, I want you to know, okay, if I give back unrealized profit, is that okay? Or am I going to start to feel like I've lost something? Or if you get flat and the market rallies to 106.55, is that going to feel worse? Which is going to feel worse? Ask yourself, because that's likely going to dictate the way in which you manage the trade from here on out. So I'm going to leave you with that. 2 of our open trade management members, we have a number of recalibrations and a new trade on the pending section of the spreadsheet in the Euro New Zealand dollar. Have a few more pairs that we're keeping an eye on as the week progresses. New Zealand dollar is going to be in play. Pound is going to be in play. Definitely Euro and US dollar, and even later on this week I'm going to give you guys a few setups in the yen. So I'll catch you in the next video.